with Wall Street. Then, in fact, as we speak, Dow and S&P 500 today have slipped, have opened in the red as Wall Street is headed for the fourth straight weekly loss. Let me take it across to Michael Hewson. He's joining us on the phone line. Hi, Michael. Good evening. This is Ruchi Bhatia. Let me first begin by asking you that even today we've seen the Dow that has entered the Friday session almost about 3% down for the week. S&P 500 has lost about 2.2%. Nasdaq also down about 1%. We did see some sell-off coming in technology stocks as well. Stocks like Apple from the start of the month are down about 19%. Just want to understand from you, do you believe this gives many investors a good entry point, or perhaps they're going to wait and watch on the sidelines given the fact that there's going to be a lot of volatility ahead of the upcoming U.S. presidential elections?
Yeah, good evening. Yeah, I think it's pretty much the latter point. I think what we have seen over the course of the past week or so, and I think it was articulated very well by Fed Chair Jay Powell earlier this week, was that without any sort of fiscal stimulus from the U.S. government, or any sort of fiscal stimulus from any other avenue, the likelihood is that the economy, the U.S. economy, is going to deteriorate. And certainly I think in some of the data that we've seen thus far this week, there is rising evidence of a deterioration in the economic outlook. We're also having to contend with rising infection rates, not only in the US, but also in Europe more broadly. And I think one of the key takeaways that I took from all of the Fed speakers that we heard about this week is that the Federal Reserve is very concerned about a potential rise in the unemployment rate with respect to the US economy. Yes, US economic data thus far is holding up fairly well, but given the political gridlock in Washington, it appears to me that US politicians don't have their eyes on the economy. All they have their eyes on is the election in less than 40 days' time. And that, for me, I think represents a very dangerous place to be. I still think there's potentially a little bit of further downside for US stocks in the short to medium term. And let's not forget, October is always a very choppy month for stocks, and we've got a flavour for that this week.
Oh, absolutely. Michael, I also want to understand from you, given the fact that you're saying that the state of the economic recovery is still in doldrums, and having said that, the fact that, things are looking even more troublesome. Look at the U.S. Unemployment numbers that came in yesterday. Besides that, Goldman Sachs has also cut its fourth quarter projections for GDP as well. Given the fact that the lawmakers are still taking a lot of time to come at any sort of a consensus on the stimulus relief package, do you believe anything will be done over the next 40 days? Or will it be now in the court of the new government, whosoever, becomes the next president of the United States?
It's highly unlikely, in my view, that there will be a stimulus package before the US election. And then after the US election, you've then got that vacuum of power, because the new president of the United States, whoever that may be, won't take up office until January next year. Now, obviously, if President Trump wins, then you have an element of continuity, and we will potentially get a stimulus deal of some form. But I certainly think, given the economic backdrop that we're coming into...
Will it be a little too late for that?
A little too late for what?
Michael, will it be a little too late for that?
Well,
for the new government to come in, and only then if we see any kind of a relief measure being announced?
Well, yes, of course it will be. I mean, Jerome Powell has pretty much said that. But ultimately, the markets are a hostage to the US political system. There is no way around that. We are where we are. So ultimately, it then comes down to whether or not the economic data holds up and whether or not coronavirus infection rates start to level off. This week, at the moment, they're showing no signs of doing that, particularly here in Europe. In Madrid, they're talking about locking Madrid down. We've seen France and the UK post higher rates of infection. They're talking about record rates, but I'm not reading too much into that because they're testing more, so you're going to get more. But the concern is if governments overreact by locking down too aggressively, in the absence of fiscal stimulus of any kind, then you are going to get a significant hit to economic growth. And I think that's why we're seeing the declines that we've seen this week, not only in the US, but also in Europe. There is a perception that what we've seen in Q3 is as good as it gets, and we could be going for a double dip.